Good morning, everyone, and welcome to the Quantum Leap Morning Leap session. This is our pre-market planning session and trade plan setup for Tuesday, August the 25th, 2015. My name is Doug McKay. I'm the founder of Quantum Leap. This is a subscription room. We've been around in one form or another for about 6 years now, and we come together each morning for these live sessions to take a look at the macro to the micro, take a look at the structure of the market, where we are in the different time frames within the trends, and then drill down to the micro and choose our levels that we want to trade off of with our targets and our hypotheses. If you're interested for more information, please contact me at quantumleaptrading@gmail.com or give me a call 647-545-8065. Okay, let's just do the legals. This information is for the purpose of educating members who want to expand the knowledge of the business of trading. It's not for trading or investment advice. You and only you are responsible for the trades or investment decisions you make. Trading futures or any instrument involves risk of loss. Please consider carefully whether futures or options are appropriate to your financial situation. Only risk capital should be used when trading futures or options. Investors could lose more than initial investment. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within the self-organized learning environment. Past performance is not indicative of future results, and any trades that you see in Quantum Leap are for education purposes only. Please trade your own plan, your own due diligence, and your own risk metrics. Okay, so yesterday I basically was at my desk for close to 22 hours. I traded through the night and through the day and had a fantastic day. Last night I actually jumped back in. I wasn't going to trade, but opportunity presented itself. I picked up another 20 points and then called it a night. I didn't realize that we were going to have this big of a retrace above 1900, so I wish I would have stayed in because I did take the long on the break above the 1900. But that's, you can't be at the desk forever. You have to take time off and enjoy life, and I had an enjoyable evening. So let's let's start with a couple things. Let's start, first of all, let's just go to our different time frames and take a look at the trends. Well, we see that the first time in a long time we've broken below the 9 and the 20. We still have 5 trading days left of the month. It's it would be very easy for us to get back above the 20 SMA and get above the 1987.50 to close above. Don't know if that's going to happen yet, but the point of the matter is the downward trend has been, or the upward trend on the monthly has been violated, and it's weakened. We came down. We didn't quite get to the low of the October session. October session, which was at 1813. But we came close, rallied up, and we've had a strong move up since. Going to the weekly, we still have a downward trend in starting in the weekly, but we have this huge technical gap, and again, the technical gap would be closed in around the 2035-34 levels where I'm looking. On the daily, again, another downward trend starting. We've got, it's not quite a foo bar, but we do have the volume spike, not as big as selling our buying tail, but we do have so far today an inside Mr. Sneaky, and we do have a technical gap, and that will be closed in around the 1999 level. And there is a couple, the 50% of the significant breakout candle, and I've been looking at this as the breakout candle, and I'll show you on the big structure. 50% of that is at that 1995 area. So I'm looking between the 1999 and 1995 as possibilities today, but we'll have to wait until the market opens to see. But we do have a downward trend on the daily. On the 4-hour, we talked about this technical gap. It got closed. A test of the upper, the 20 SMA is going to take us up into that 1967 area. We are testing the downward trend that we've been in the 4 hour, and currently trading just above the 9. Going down to the 30-minute, you can see that we have been in a upward trend since coming down here, getting a tech gap. Mr. Sneaky led the way again, and we've rallied since. They tested the trend here and then popped back up, and we do have good slope and separation on the 30-minute. And then on the 5-minute, you can see that we've come up here. We've got some consolidation going. A little bit of a downward trend, but we don't have much slope. We do have separation, more of a sideways consolidation. Now, I was doing some homework this morning, and there is a possible, it's sloppy, but it is a possible measured move with a head and shoulder pattern that gives us a measured move. The 61.8 is 2,275 thereabouts, and the 38.2 is 1977-75, 1978 area. But the 100% extension is all the way up here at the 2043, 44 level. So just this big picture, just keep an eye on it, and and again, it's not the best head and shoulders, but it is a valid pattern. Going to the big picture. So we've got this huge doji day, okay, and we've got this huge wick. So there is a strong probability that we're going to get stuck in this wick today. The key line in the sand for us is going to be this 19, I want to say 20, I've been saying it for so long. The key line in the sand for us above is going to be this 1949.50. We've got our overnight high up at 1948, and we've got yesterday's RTH session high at 1950.75. So if we get above this 1949.50, then I'm looking for the possibility to coming up and filling this gap that we've got. The significant breakout candle is this candle right here. It's a gap and go candle, and I always look at where the 50% retracement is of the significant breakout candle, and that is at 1995.25. So if we do get up and get inside of this this candle, and I don't know if we will today, but I mean the ranges are so huge right now. Our full session range yesterday was 133.75, and the RTH session alone was 119.75. Apparently, that's almost or equal to the largest day in history, going back to the 2000. I think it was 2001. And then overnight we've got an 80-point range. So I mean, it's hard to say. Can we get up another 100 points? It's possible with the way the market is trading, but my sense is telling me we're likely to settle in here and get stuck in the wicks, and I'm going to be using 49.50 as the defining line for that. If we get above 49.50, look for them to come up and test this 58 again. Remember, this 58 was something that we were trading off of on Sunday night. And then above 58, 64.25 and 69, and of course, a test into the significant breakout range, with the low being at 1968. Inside of 68, I'm looking for 75 and 78. If we hold below 49.50, then I'm looking for chop inside of here. And what I'm really looking at is, if you go all the way back here, is we're inside of this balance area here, and the high is 1965.50 value area high, and value area low is 1890, with the microcomposite VPOC here at 1941. So if we can stay above this 34 range, which we're testing right now, this 1934.50, then I'm looking for a move up into this 41 and then a takeout and a test of the overnight high at 1948. We still have time. We could even come up and extend our upward target. Inside of this, you've got to look at a couple key levels. We've got this level right here at the 33.75. I'm sorry, 33, and then we've got this level right here at 17.50. So just keep an eye, and those are two areas of price acceptance on the medium term that coincide with the longer term. But we are inside of this balance area that ranges from going back to May 28, 2014 until we broke out, in the October of 14. So most of, last year, summertime, spring, summer, and fall, we were in this value area here with the most accepted price or most traded price being 1941. And you can see we're coming down right now and we're testing this 33 right now. So I think we're going to see some chop inside of this wick today. Let's take a look at some of the downward side targets. Above 34, I'm looking for 37 and 41. And above 41, I'm looking for a move to take out the 48 and test the upper side of this level. It's pretty blunt in this area of the composite. We've got undetermined fair value at 41, 37, 28.75, and 22.75. If we hold below 34.50, look for them to come back down to this 28.75 and test it 26.75. Below 26.75, I'm looking for a move down to 22. And then key line in the sand for me below in order to hold above the 1900 level is going to be this 1920.75. I was trading it all Sunday night and watching it now. If we get below that, then I think we're going to make a bigger move back down into this microcomposite at 1904.50 and test the 1900s once again. And if we get back into the 1800s, your key line in the sand is going to be the 1860. It was 1887. It's now 1886.50. Because if we get below that, then I think we're going to come back down and visit some of these lower levels that we are looking at, possibly even come down into this 1841 value area high and test that again. It's going to be tricky trading again. No doubt about it. I think we're going to see some, if you take a look at you don't see this very often. So you're looking at yesterday's profile and the rotations, and you can see that 73.75, 44, 67.75, 30 and a quarter, 25 and a quarter, 15.50, 17. The smallest rotation yesterday was 6 1/4 points. You don't see that. That's unheard of. Then take a look at your overnight. It's the same thing. You've got, 13 and 20 and 16 and 10. The average rotation last night was 7 points. That's huge in the Globex. So I still think we're going to see some oscillation and some wild swings, and we have to be careful and not get caught on the wrong side of a rotation. All right, so let's overnight we've got a high of 1948.50 and a low of 1868. Key CLVN or LVN overnight and why I'm using that 1920.75 as a key line in the sand below us is it is last night's LVN. So I'm going to be marking that as a key line in the sand. All right, and our overnight low is all the way down at 68. I think we have a very low probability of taking out that 68, but you never know. Also happens to be right near the open, and basically we had a doji day yesterday with our open and close right around the 68. And then there's really no other key LVNs to look at. Our overnight VPOC is 35. And those are an overnight high, of course, is 48.50, just below that range high from yesterday's RTH session. All right, so we don't need this anymore. Let's expand this out and start taking a look at where we can set some trades up. Well, definitely we can set up trades in the 34.50. Just above or just below, I should say, our VPOC. Above 34.50, our first target is going to be 37. I'm actually going to use the 39 because I think the HVN, or actually, yeah, 39 as the target. You can use 37, but I think if we get up above here, and you can see we've got an LVN from yesterday here at 35.75. So I'm going to actually adjust this 34.50 to incorporate. So I want to be above 35.75. Put me above the balance at 35 and above that 34.50 CLVN, and then target that 38. You can use 37, but I think 38 is going to take precedence. Then just above that, we've got the 39.75 as possible resistance, possible responsive sellers stepping in there. And then above 39, key level for us above is going to be this 41. And it's just above a little LVN here at 41.75. The LVNs from yesterday aren't going to be as important as the longer term ones, simply because of the fact that we are rotating so quickly and we were in liquidation. So, they're not going to be a strong resistance to us as they would be overnight and longer term. And then above 41, the next target is going to be 45. And then, of course, above anything, if we hold above the 1939.75 and get into the 40s, then I think you got a high probability, that 96% probability kicks in to take out that overnight high at 48.50. And then, the next area is going to be the range high at 50.75. And then above 50.75, you got the 52.25 as your first target above range and above value. And then 58 is going to be our key line in the sand above. And then once we're above there, our first target's going to be that 64 and a quarter, 66.50 as possible resistance. And then we're getting, and I can actually incorporate this right up into, so, we'll actually use, I think if they get up in this area, you really want to be watching the range low from that breakout at 68. And then above that, you've got the 71.50 gap close from this day right here, the significant breakout day, and then 75.50. Come on, why won't you? There we go. 75.50, and then the 77.75. Just above it, you've got that 78 and a quarter, and I'm going to use the 77 as the area simply because it front runs the 77 and a quarter. And then you've got 80, 75, and then the significant 50% significant retracement of the breakout candle is 19.95 and a quarter. Oh, look at, we actually have a naked VPOC right there too. All right, and there's really nothing in between. You've got 87.75. And then the measured move that we have at 99. What was it? 90. 99 and a quarter. 99 and a quarter. 99 and a quarter is the 61. Where is it? Right there. 99 and a quarter is the 61.8 retracement from the move down from 34. 61.8% retrace from all-time highs. Oops. So we moved from 34 down to 31, and this, the 61.8 retracement from that level is up at 99 and a quarter. And then you've got the 2000, and then above 2000, you got 204. Resistance at 08. Oh, I don't know why that does that all the time. '04, then resistance at 08.75, and then the target above that is the 2011.50 area. I'm going to use 2011. No, I'll use 2011.50, and then 22. Actually 19. All right, I don't think we're going to get much further than that, even if we do rally. Okay, to the downside, below the 34, we're already up at 38. We're going to that 41 and testing it already. 34.50. It's just going to be right below here. And then below that, our target is 28.75, just above the value area high from yesterday. And then our, IB, our value area high was up at 25.50. Once we're at the 25.50 and inside of value, I'm looking for the test of the 20.75, and then below 20.75, I've got 17.50. And then the key level inside of here is going to be that that 08 area. You've got the VWAP at 1907.50, and you've got the VPOC at 07. So, I mean, there's 13. You know what? You can use 13.75 because I really think that if we get back inside this lower area below the 20, you can accelerate to the downside towards this 08, 07 area. We were using it yesterday as we're using 08, 1900 as a bracket. And I think we can very easily come back and target that. Of course, 1900 is going to be a key level, and then below 1900s, then I'd be looking for a move down into the 95.75. As your first target. 1891 is the 50%, and below that, I'd be looking for an 80% destination trade down to 78.50, value area low, and then below that, I move down to take out the overnight high and the naked close here at what was our close yesterday? 68.75. And then once we get down here, then we're in the lower wick, and we've got a zipper area. We went through here, like it was butter, on the way down and on the way up. I mean, this whole move took about 30 seconds. So we've got to think that if we get below value, that we're going to zip down through this again. And I really would not want to try to do anything but be short into this. So the key level, I think, would be this 65. Anything below 65. I wouldn't even put a target on here except for this 28.25. So, I mean, we'll use the low from yesterday, but I think you've got 28.25 written all over it. And then, of course, when we're down here, we have nothing till the 22s, and below that, you've got 17.75. Well, I would use, 18.17.75. It's get short. Below this, I think we're going to 1800, and then below 1800s, the first target below that is going to be this 97.75 and 95 and 92. I don't think we're going to get down here. We get into the 1800s, then you're looking for a move to start taking out some of these significant targets here. But I don't think that's going to happen today. But you never know. I mean, we're in a volatile market right now. Is there anything else I wanted to talk to you about on the ES? 50% retracement, I've already did. All right, so that's what I'm looking at on the ES. Pick your levels. Look, we're already at that 41. Geez, that would have been a nice trade. I hate when trade setups while I'm in here. So now we're above We're above this 34, 35 area. We're above the 39.75. We're into 41. I'd be looking for them to, make their way up towards this 45 and the takeout of the overnight high and continue this Tuesday run up. If we get back below 39, they'll test the 34 level, and below 34, you want to be short into the 25.50 area, with 20.75 being a very, very important line to hold. Let's take a look at the Keltner. Currently right now, we've got a possible Keltner upper line walk. Upper line is up here at 42. If we get a double Renko reversal, then likely a move down to 36, the overnight VPOC 34, and then that key level 34.50 below that, down to test the 31 level, 32 by the time we probably get there. But it looks like we're getting a Keltner upper line walk, so I'd be looking for them to walk up into that 48. You never know. We've got 15 minutes. They could go and extend the overnight high with the the quickness of the moves. It's possible. In terms of gold, and one of the reasons why it leads me to believe that we're going to get more movement to the upside, is the fact that why did that happen to my chart? That's because I just hit something I shouldn't have. Yeah, I got to revert this chart. Anyway, gold right now is showing some weakness. It's in a downward trend right now. I'm moving my stop up, and I'm moving my stop up to just below this 1129 area. We're not getting the flight to safety. We spiked up to 1169.80 yesterday, and then they just sold it off the rest of the day. So that concerns me. So my swing trade is in jeopardy for a retrace. So I'm just going to start working my stop up. I want to give it enough room so that we can, we could come down to this 43.10 and then bounce again. Below 43.10, I think you got 37 and a test of this 29. If they don't hold the 29, then I don't want to wait for it to come all the way back into the lower 1100. So I'll just take my profit and call it a day. Anyway, that's all I've got for today. As always, trade well, trade safe, and we'll catch you on the flip side. Oh, revert. All right, we've got, we're coming up to 43. We're coming up into that 45. They got them stacked at 45 right now. Anyway, that's going to complete the session, and we'll trade well, trade safe, and we'll catch you on the flip side.